Happy Monday, traders. It is 8:01 a.m. Chicago time on the 21st of October, 2019. This is episode number 1621, 1621 today. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's got an interesting blend here. The overall allocation is to risk. The Russell being a leader this morning. That's a bit of a surprise there. Um, the Russell's up 0.89% or 13.7 points from Friday's settlement, followed by the DAX. The DAX took a quick pop just now, up 108 points. And then the Euro stocks behind that, the Nasdaq 37.5 points up. Crude oil is the laggard today, 53.35 on the December contract, or off almost 1%. The bonds are off 24 ticks. The Bund is off 52 ticks, and the 10 years off 8.5 ticks. So this is where we stand this morning. Again, allocation is slightly to risk. Currently, the ES is showing that it's opening in a gap up above Friday's range after that big dip in the afternoon, in the late morning here in the U.S. Also, the news from Boeing, and so overall, the market's taken us pretty well. Friday's low was a V bottom. We'll review that. This is really showing a little bit of strength coming in and is likely to start challenging that 3008 we left behind from Thursday's, what it looks like. In terms of what's ahead on the calendar's pretty clear until Wednesday in terms of the high impact scheduled releases. Now there are releases every day. There are Fed speakers. There's Fed's Bowen coming out speaking at 11:40 today. Um, it says U.S. monthly budget September, but I thought we already had that for 2 p.m. Eastern. On Tuesday, also pretty light. A whole bunch of events, nothing major. Fed's Kaplan speaks at 1 tomorrow. Wednesday at 10 a.m. Eastern, we get the Eurozone consumer confidence. That's considered a high impact figure, consumer confidence flash for October. And then we get crude oil inventories and so on. And then Thursday, we get a few releases, high impact releases for the week. The German market manufacturing PMI at 3:30 New York time, the ECB rate decision at 7:45, the ECB press conference with the ECB President Draghi at 8:30, durable goods at 8:30, and then a bunch of market releases, market services, composite manufacturing PMIs that morning, along with new home sales and so on. Friday brings us to the GfK consumer confidence and IFO business climate, both German releases, and then that's the week. That wraps up the week. So early on in the week, not much, nothing heavy scheduled. The news just a few moments ago was from Larry Kudlow, the president's economic advisor, saying that there's a chance we can get December tariffs on China off the table if phase one trade talks go well. The market took that pretty well and popped higher. On October 16th, Treasury Secretary Mnuchin said that stated there was still work to do in documenting the trade deal with China and would address December 15th tariffs as we went along with the negotiations. That's it. That's the recap. Let's take a look at our review. On Friday, we were opening right in the middle of value in Thursday's range, and the expectation is we're likely to push higher early and then push down and out of the range to the downside. I was estimating 29.85 for a low area, and for the market to finish somewhere within Thursday's range. That was the primary scenario. The secondary is a dip down that ends up giving us an open auction type trade that grinds up and pushes through that 3008. Here's what we actually got. See if we can see it here on the tick chart. So we got the push up right there. We got the dip, right? So this was our target right here for scenario one, for it to return and consolidate in here. That was expected to be scenario one right here, and then the market actually took a bigger dive, um, 10 points below that, into this low volume zone created on October 4th. That has a gap zone in it, and then it climbed all the way back up to finish somewhere in the middle. We finished above mid. The point of control is above mid at the IB low. What we have is a bit of a V bottom here, just an impulse down that goes all the way back. There's no continuation. It's a V bottom because it didn't consolidate and push that low before climbing. It ended up just bottoming, finding buyers with a nice taper in volume as prices went lower, and then finding buyers and coming all the way back. So with it having closed that way, and with us trading up here near the 3,000 figure, just slightly above the Friday's high, it shows that there's quite a bit of strength here, and it's likely to squeeze. I'm expecting a squeeze higher. Now this is Monday. It is, Monday's a pretty lazy days historically. There have been days which were not lazy, but in general, Mondays don't really show a lot of range expansion and a push. So that's where we stand in terms of what we did on Friday. Let's take a look at the overnight session. The overnight session immediately opens, pushes higher, and continues to push higher. A nice little test of the mid here before the continuation higher. It's relatively showing a relative amount of strength. Overall, the point of control had migrated higher above that 29.94.50 double top. This, for those who look at patterns, you might see this as a head and shoulders, inverted head and shoulders pattern, with the pivot being a 29.94.50 for a projected target of somewhere around 30.15 or so for pattern traders. I'm not a pattern trader, but this is sort of an inverted head and shoulders. So showing quite a bit of strength in the overnight session. The volume in the overnight session, though, not so great. 150,000. Not as strong as it's been in the past. It's a little bit light. We've been doing about 200,000, 185,000 contracts. Participation is not all that great. Not all that great coming into today's session. This is part of what feeds into the idea that it's likely to be a pretty lazy Monday. The overnight inventory is long in price and in delta. It seems it's not it didn't push that hard, but it seems like buyers are more in control than sellers are. That's that. A quick look at the order flow on ctbookmap.pro here. I'm gonna push this back and show you where we've been. Now this size has been here all evening at the 3000, which got taken out with a collision on the Kudlow news. Above there at 3001, there was some liquidity there too, and that got collided with. If I zoom in, and show you the action here, you could see how it spiked into that liquidity, and then it ended up with a collision right here, this green dot lifting, and then we ended up with another green dot lifting with a pullback to the collision zone and an attempt higher. And overall, that liquidity has been quite stable overnight. Underneath 2990-ish, 2989 has been um, pretty pretty well bid for the last few days. It seems like somebody's working a ginormous order down there. We've seen some icebergs go off in that area and so on. Beneath that, 2984, a little bit light above there. 3004, 3005 is the next key area on offer. So let's look at the full depth now. Above there, just above the weekly high at 3008, we have 3009 with some liquidity and 3015. Now 3009, 3010, pretty big area. It's a big stock zone for me. And then 3014 and a half is also a big area. And then above there, 3020. 3020. So just these are kind of areas that you want to pay attention to and see how the liquidity responds as the market moves into it. I'll be paying attention to those areas because they coincide with my stock zone, pre-designated stock zone areas. And so I will be looking to engage in those areas. Whenever there's a stock zone coupled with liquidity, I'm interested. I'm interested in participating in that area either as a scale out of a long, depending on the context of how we open, or something to initiate a short, knowing that I would be moving against the trend and taking into account the kind of the kind of participant that is in the market at the moment. Okay, so that's where we stand. Let's take a look at what we're expecting for today's session. Let me turn on my stock zone areas here. Going back to plain charts. So let me take a look here. So what we're looking at today, this is likely to pull back a little bit into the open here in the next 15 minutes or so. But what we're looking at here is that is a market that's opening right on the edge. It's important to draw out the composite in this area and to see and to find that we have a high volume node. We have a point of control at 2997. We have a high volume node in that area that used to be a low volume node in September 2990, the 2990 area, and there's a split in between in this 2994 area that has been in play for a little bit. 2994 comes to us from there. It played out here, a little bit here, and it's a double top, a local double top. This area that makes up the stock zone is almost like a line in the sand, really, for today. So I'm expecting a small reversion, open auction out of either in range or out of range by just a little bit. I'm expecting a reversion back, looking for the market to step back into 29.94, looking for an impulse higher consolidation and a small push into that 3009, 3010 area to test the most recent high. That's the key scenario, the most likely scenario. Secondary scenario. Secondary scenario is an open auction that immediately moves up, continues the overnight sessions action, takes out the overnight high, and then just continues to squeeze on this, bright and shiny news that we just got on, it pushes its way into this 3015. I would love not to see this scenario play out because it's just one of those. It's a low expectancy scenario for me because I'm not the kind that sits there in the grind and just kind of sits along and gets long and just sits all day long. It's not where my strength is. but there's a pretty good probability, given the way these prices got rejected, we are likely to kind of continue to squeeze higher as sellers fuel the push up through short covering over time. Okay, so those are the two key scenarios. The third scenario is an open test up, drive down, and that could really bring us back to 2981, 2981.50, and then not very likely. I think scenario one has a pretty good chance. If we dip down, I'm looking to lean against that 2994.50 area on a first touch. Um, if not, then look for 30.10 and then 30.15 to the upside. I'm going to switch up a little bit here, like I had talked about. Just a quick trade wisdom point that I'd like to make for everybody. I was having a conversation. We had a meetup on Friday for CT members here in Chicago in my office building, and I was having a little conversation with someone about losses. This obsession, and it's understandable. This high focus on avoiding losses. And we all have this within us that we want to do whatever we can. We want to study. I guess I can call it study our losses out of uh, our trading. Right? Somehow there's got to be some code to crack that would make it so that we never take losses. And what I'd like to propose is a different way of looking at losses. It's We're approaching Halloween here in the U.S., and you have a lot of little pumpkin patches and little mazes and stuff that you can take your kids to. It's for adults too, and some of those include games, where you can pay a certain number of tickets or a certain number of dollars, and you have a chance at winning, a big teddy bear or whatever by shooting a BB gun or darts or things like that. I'm sure you're all familiar with those games at the county fair and so on. Um, it's it's really the same process. Your loss is look at the loss as the cost of of having a chance at a win. Just like paying $5 to throw three darts or to shoot balloons or whatever. Uh, there's if I came up to the game at a carnival and I didn't pay a dime and wanted to play, I can't play. I have to pay to play. And if you're sitting there trying to figure out how to think off your losses from your trading plan, then chances are you're in a simulator and you've been in it for 8, 10 years of simulating, or you're sitting out to the point where you cannot stand sitting out anymore. At the end of the day, you have to pay up. You have to pay. And the loss is really the cost of acquiring the chance to win, period. It is just a completely natural part of what we do on a day-to-day basis. If I don't pay for that sandwich, I don't eat it. If I don't pay for my ride share, I don't ride, period. So your losses are really a little fee that we have to pay. We have to pay this fee in order to win. And our goal, so you might think, but sometimes I don't lose. But our goal is in the long run to get a benefit from paying this fee that far outweighs the fee, otherwise we'll be out of business. So for those people who put on a trade, wait forever to put on a trade until the stars and the moons and everything aligns, and then you hold on for a 30% loss, those situations essentially turn the whole equation upside down. This is like, instead of paying $5 to take three shots for a prize, you're basically paying $1,000 for one shot. It just doesn't make any sense. So the goal here is to pay as little as possible for the right to acquire a win, period. That's what a loss is. A loss is just the cost of doing business. In addition to your commissions, clearing fees, platform fees, all that stuff, a loss is just the cost of having a chance to acquire a win. So don't try to avoid it. Try to minimize it. Don't try to avoid it. So make it so that the cost of entry is reasonable enough for the return when you win, so you can be ahead. That's it. This is the Warren Buffett formula. This is the Jesse Livermore formula. This is the JP Morgan formula. It's the same formula for everybody. You will not avoid the loss. And you cannot avoid the loss by looking the other way. You can't avoid the loss by pretending like it didn't happen. Your goal is to take the loss as efficiently and professionally as you can with a minimum amount of errors so that you're paying as little as possible for the right to win, right? For the chance to win. It's not a right. That's all it is. That's all it is. Okay. Don't forget this. This is really important. So a loss is not your enemy. A loss doesn't mean that you're not a, a great trader or a man or a successful woman. It doesn't mean any of those things. A loss is just what costs are you choosing to pay based on your plan and time frame and a whole bunch of other parameters. What cost are you choosing to pay for the ability to participate in a win? And if that formula is upside down, then your results will be upside down. It's common sense, right? So I want to simplify this to the fact that if you want to play, you're going to have to accept losses. If you don't accept losses, you will probably play at the highest cost possible. You have to accept those losses. Good luck.